All right, welcome back everyone to another episode of the Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
Hello, everyone. Good evening.
Man, pull up a chair, pull up a couch. I don't know what you gotta pull up, but we gotta pull out something. The market has been a little bit uncertain today, man. As you can see across the market today, we have seen some pullbacks on some of the biggest indexes. So if you look at, for example, S&P, S&P dropped down over, let me see, was that S&P? No, Dow Jones was down 620 points, which is roughly about 1.2%. S&P fell 0.74%. NASDAQ was down 0.89%. I mean, what caused the sell-off? Some people are saying it's the Middle East tension. Some people are saying it's treasury yield. Some people are saying it's inflation, all of those different things. But I mean, if you guys really paying attention, probably what causing the sellout is some people probably taking profits. I don't know. Some is happening. Some people making money. And you gotta add to that top of that, this is the last month of the second quarter. So there might be some rotation happening. So pay attention to all of that stuff. With that being said, man, Wale, let's dive into some of those moves today, man. I know we have some big uh earnings that happened this week that we'll talk a little bit about it. But overall, man, overall the market today seemed to like even yesterday it pulled back a little bit. I mean, yesterday kind of had a little bit breather, but today it's just like it seemed like everything kind of pulled down a little bit. And not to mention, oil actually went up today. Oil was up like 2.8%. Gold also was up to 1.7% around that area, back to 4,000 area again. So again, like we are seeing some of those hedge stocks or hedge commodities are actually kind of going up a little bit. So let's talk a little bit about that, man.
Yeah, so today was a day where sometimes you need to be reminded that you can't get too lackadaisical during very, very, very strong bull markets. I keep saying that this bull market just really it doesn't necessarily follow the manuscript that you learn in economics or as you learn as a conventional long-term investor. I mean, the things that we're seeing are just crazy. Like a stock will be up 10% one day, and then you're like, oh, okay, let me wait for it to consolidate. The next day it's up 18%, right? So today is just a reminder not to get caught with your pants down. And there are some things, and we're going to go into detail about these a little bit later, that I don't like to call tops. I don't like to say we're near the top but there are certain things that happened this week that will give people a cause for further analysis to say, okay, what should I be doing with my AI positions? And for the most part, again, I'm looking at some of the bigger names, like we've seen Google has come down pretty tremendously. We're going to go into details around that. I think it hit a peak of 404 not too long ago. Now we're trading at 355. So we've lost about $50 on that stock. We've seen Amazon come down a little bit. We've seen ABGO is down today after they reported earnings. Nvidia, despite their strong earnings, I think they had a pretty good day. What was that? A couple of days ago,
Yep.
and then it got rejected at what two? I had 227.40 on my chart, and it just came straight down.
Mhm,
So
mhm.
I'm not going to sit here and press the panic button, but I will sit here and say that because of the run we are on, two things. If your earnings aren't like super blowout, like Dell and HPE, chances are your stock could sell off, especially if you've been on a tremendous run. And the market is getting to a point where, again, I think profit taking, as Billy mentioned earlier, is starting to get a little bit more, I think, prevalent where people are trying to lock in some of these gains. And
Yep.
then bond yields, got the 10-year moved a little bit higher today. That to me is something that you can't ignore. Oil also moved higher today. And it sounds like the conflict in the Middle East really isn't a ceasefire because it sounds like they still shooting at each other. So
Mhm.
how that develops or escalates over the next couple of days, we don't know. So as you start to see uncertainty, now you start to see a little bit of a pullback. Now, the one thing I will say is the VIX moves higher today, but
Yep.
it was well off its highest levels of the day. Like it came right back down. So that's just something also to watch out for to tomorrow.
Yep. 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 But in terms of the earnings, man, I mean, we saw some good earnings this week. I think
Hmm.
HP recorded this week and they were up like 19%. And I mean, if you guys see the move, that was, I mean, I'm just thinking like about HP, Dell, all these names are just like, we really didn't really like think too much about this whole AI build, you know what I mean? And now all of a sudden they're just showing up, you know what I mean?
Yeah.
So
Dell,
again,
Dell was another one too.
Dell, yeah, Dell. I mean, like those are crazy names that in the grand scheme of things, you're probably not paying too much attention to it, but for this AI build, they seem to be showing up on the map a lot more. On the contrary, I mean, we see AVGO. AVGO is down like big after hours. I think we're talking about this. I think that's probably going to drag the market tomorrow morning. So let's talk a little bit about AVGO. I mean, their numbers weren't bad. I mean, the AI semiconductor revenue more than double. I think it's like 10 billion or something like that. I mean, they the numbers was fine. So why are we seeing this massive drawdown on their stock right now?
Yeah. So the one thing that I will say is always, I always say this, like going into an earnings report, if a stock has been on a tremendous run, sometimes you just got to play it safe and you just have to expect the fact that it could pull back. Now, there are some exceptions. It doesn't happen all the time.
Right,
Let's just put that out there. But
right.
if you look at where AVGO went, AVGO on what day is this? Let me click up. All right. So this was okay. So this was on 528. ABGO was trading at a low of like 415. It hit a high today of 495. So just look at that
Mm-hmm.
move going into earnings. So at that point, the expectations just get higher and higher.
Yep.
And when you look at the numbers were kind of like good, like they weren't excellent. The market was looking for excellent to
Mm-hmm.
pay the price of where it had traded to.
Yep.
So because of that, you're getting this sell-off. Now, a 13% sell-off, that seems a little bit excessive. But if we
Yeah.
look at the numbers, Q2 revenue of 22.2 billion, roughly 48% year over year. And it says with adjusted EPS of 2.44, slightly ahead of expectations. As you mentioned, AI chip revenue grew year over year to 10.8 billion, which is 143% year over year increase. And it says the AI semiconductor revenue to reach roughly 16.5 billion next quarter, which would be up more than 200%. So the way I look at it is if I'm an investor and I'm looking at ABGO as a strong candidate for a name that I want to be in the AI build out, and I have a long-term time horizon, based on those numbers, this is probably a stock that I probably want to put on my watch list and maybe be a part of. Because to me, when you start to analyze the numbers and you start to dig deeper into the earnings report, to me, the question you always have to ask yourself is there anything wrong with the business, or is there just anything wrong with the price people are willing to
The
pay?
price. Yep.
And if it has to do with the price that people are willing to pay, and there's nothing wrong with the business, then maybe I say I can get a good business at a cheaper price compared to where it was trading today. So that's how I would approach the earnings report. And I mean, we did that with Palo Alto Networks on that last earnings report
Yep.
a couple quarters ago when it dropped to like 139. We wrote that thing to what 250,
Do something. Yeah.
two something, and now it's down again after yesterday's report.
Yep.
But if you get on the call and you listen and you say, okay, is there anything wrong with the business, or is there anything wrong with the price people are willing to pay? As long as the business is good, this is a long-term name that I probably want to hold. So that's how I look at it.
Yep. 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 And I agree with you, man. Like if you look at crowd, if you look at Palo Alto, also same thing. Things they kind of good numbers, good reporting, but I mean, I think even was it Palo Alto, was it crowd that gave actually raised its full year guidance? Like they even raised it, and still they got sold off. You
Got
know what I
sold off.
mean?
Yeah, got sold off.
So
Yeah. So
I think we're at a time of like people realizing, like, kind of what you said, like, is this the number where I want to actually keep buying the stock, or should we drop it down a little bit more, then I can get back
there,
in?
there
Yep.
you go. That's the thing. That's the thing. Because let's take a look at Palo Alto Networks. Palo Alto Networks is up 90%, more than 90% in 3 months
Hmm.
going into earnings. So at that point, again, it's like the expectations get dramatically high.
Yep.
CrowdStrike, same thing. Let's take a look at CrowdStrike. It says they reported revenue of 1.39 billion, which is up 26%, adjusted EPS of $110 a share, and annual recurring revenue of $5.51 billion, and raised their 4-year outlook, but the stock dropped. So there you go. Palo Alto Networks, another one where their Q3 revenue of about 3.0 billion, up 31% with strong RPO growth and management, emphasizing that AI agents are creating security and identity management risk. So, to me, I've said this about these two names. Those are the two 800-pound gorillas in the cybersecurity space. They're probably the ones that are well positioned to take advantage of this whole AI agent build out. So, those are probably the more Teflon names in that space. There are a lot other names out there, but I still think maybe we'll see some more consolidation in the cybersecurity space because there's a lot
Yep.
of guys that overlap when it comes to what they actually do. And there are some companies like Zscaler who play in the same sandbox as the big boys. And right now the
Yep.
big boys are eating everybody lunch. So, CrowdStrike and I mean, if you ask me where CrowdStrike and Palo Alto Networks will be over the next 3 or 4 or 5 years, I mean, I think these names could easily be well above, where they should be. Granted, we don't see any super catastrophic market correction or
Pullback.
something
Yep.
like
Yep.
that.
Yep. Yep.
Correct. But if all things remain equal and remain the same, to me, these are the two strongest names in the cybersecurity space, personally.
Yep, yep. But again, like, yeah, those are all needed company. I don't think there's anything wrong with these companies. I just think
Correct.
like people are just reevaluating, is this the amount I'm willing to pay for it today? You know what I mean?
Correct.
So
Exactly.
we are gonna see those pullback. I mean, if you see something running like 90%, 70%, 100% in like less than 6 months, even like for the whole year, that's that's a huge amount of money being poured into that stock. So of course, people are gonna get to a point where they're taking, taking some profit. But again, I can remind you guys, this is like the last month of this quarter, so there are gonna be some profit taking. There is gonna be some rotation. Something is gonna happen in the market where we're gonna see some sell off here and there, and then once the next quarter starts, we can probably see where the money is flowing. But overall, I think those numbers are not bad. Like those companies are putting on some great numbers. It's just people are just taking profit. I honestly think that's the time for it, you know? So
And I also
um
want to be clear, if you're new to investing and you're kind of seeing what is happening in the market, let me be 100% real with you. This is not normal. This is not, this is not normal.
yeah,
I'll be very honest with you. For a market to be moving with this type of speed,
yeah.
where there is a global conflict that directly affects everybody because of oil spiking to where it was in such a short period of time, and also bond yields moving higher, I'm telling you, this is not normal.
Yep.
So take that with a grain of salt. Like,
Yep.
if you are in a name and you are up 500, 400, 200, 300, 90% in such a short period of time, there's nothing wrong with being a little prudent. I'm not
Yep.
saying that simply abandon your position, but there's nothing wrong with trimming positions and being prudent about your risk level because remember, as your
Yep.
position grows, so does the target that a sell-off could hit.
Yep.
Remember that.
Yep.
So
Yep.
you have a $10,000 position that's grown to $30,000, right? That's a $30,000 target instead of a
Mm-hmm.
$10,000 target.
Yep.
So, and a 10% correction at 30,000 looks a lot worse than a 10% correction at 10,000. So just
Yep.
keep that in mind as you are investing throughout this bull run. So just everything is about perspective. So just keep that in mind.
Sure is, man. Definitely is. But keep an eye out there. I mean, I'll say be watchful. Like while they say if you're in profit, there's nothing wrong with securing some of those profits and
Yeah.
um, getting some of that money in. But let's move on to Google, man. I mean, I was kind of surprised about this one. Google launched a historic upside 84.75 billion equity offering to aggressively fund its skyrocketing artificial intelligence data center and compute infrastructure. I mean, the last person we saw this doing this was Oracle. Now, you see what happened to Oracle once they announced that. You know what I mean? I mean, they kind of recovered a little bit too, but I mean, I think Google is going all in. I honestly think they're just going all in on this 100%, you know? So let's talk a little bit about those numbers and see exactly what that means for the AI.
So I will be honest with you that this comes to me as a big surprise.
Yeah.
This comes as a big surprise because remember when we first started talking about the AI build out and we were talking about all the hyperscalers and how much money they were going to spend on AI, we looked at their numbers and we said, oh, this looks like it can come out of free cash flow. They have cash on
Make
hand,
enough money, yeah.
have enough money to make it happen. Now we're starting to see names tapping into the debt market. Now we're seeing Google tapping into the equity market. It says Google has not had to tap into the equity market since 2005. They have not had to raise money via shares since 2005.
Crazy.
Now, remember, Google also issued bonds a couple months ago. And I want to say that number was somewhere in like the maybe the 35, 40 billion dollar range. Now they're issuing debt. Now, let me put this into context. When I'm looking at Google and I'm trying to go back to so they're doing a $15 billion common stock offering, and then they're doing $15 billion in convertibles. Then they're doing a $40 billion ATM program for A class and C class shares. And then they're also doing a private placement with $10 billion that's going straight to Berkshire Hathaway. So when I look at this in context, Google's total debt has now increased over $100 billion. Capital that they've raised, if you look at debt and equity, is somewhere around 165 billion. We look at their capex spending for the year, it's about 100 to 80 to 190 billion, and their operating cash flow is only 174 billion. So, to me, the question as an investor in these names, and I'm assuming you have to start looking at, okay, when are all of these huge CapEx investments going to start paying off for investors? What's that timeline look like? And I want to say it's probably not going to be anytime in the next, I'd say 18 to 24 months. It's probably going to be a huge drag on free cash flow for Google.
Yep.
But if we fast forward 3, 4, 5, 6 years from now, do we start to see that return on investment? Now, I will say this. If Berkshire Hathaway, to me, who is one of the most conservative investing arms that we have seen in the last 5 years, who doesn't chase hype, if
Right.
they believe in Google, that gives me some confidence, right?
Mm-hmm.
Because if you look at Google, Google is one of the few companies that sits in pretty much every single aspect of the AI build out.
Yep.
Chips, compute,
Mm-hmm.
they bought an energy company, they have large language models. So if you want an all-in AI stock to invest in, the best name is probably Google
Yep.
to me because they touch a lot of areas. Now, do they have their different partners in those segments? Yes, because again, they don't build their own chips. TSMC does that, but they do design those TPUs.
Mm-hmm.
So that might be what Berkshire likes because Berkshire is like they're a good cash flow company, have
Yep.
good business, solid balance sheet, and this is our AI play that we're going to ride until the wheels fall off. So That's how I look at it. But I'm surprised that they issued equity at $80 billion. That's a lot of money.
Yeah, it is a lot of money. I mean, and we can kind of see like people concerned about like stock dilution and all those different things that's probably happening. But again, like you say, if you have like a backer like Berkshire Hathaway, you gotta give people some type of like security. Like, okay, maybe there is something they're seeing that the broader market is not seeing. And like you say, Google sits at the intersection of so many of those different things. They have made already investments for the future when it comes to AI. They're already sitting in a good place. So we'll see, man. When
Yeah,
companies raise debt like this, so it does bring some concern a little bit, but we shall see. We shall
yeah.
see what happens.
And I also say too, I think one of the things that Berkshire also likes is that Google actually pays a dividend. So while you're holding the shares, at least you're going to be getting
You get
compensated
paid. Yeah.
for owning the stock. So
Yeah. Yeah.
yeah, we'll see then. I probably would not be surprised if Google continues to drop from here. I would
Yeah.
not be surprised. But
Yeah. No, looking at the way they're closed today, if we lose this to what is it? I think it was 255. No, 350. If we lose this 350 area, I think we're probably gonna go down to like the 330, maybe even like 320s. Like that's I mean, you see the way he closed today, like a shooter to the downside.
yeah, it was not a good close. But again, I would not be pressing the panic button.
Mm-mm.
And Google to me is one of those companies. They're not like Facebook who kind of just, spends first and asks questions later.
Yeah.
I, I I think Google has a better process when it comes to big projects and spending a lot of money.
Yep,
But
yep.
these capex numbers, if we're at 180, $190 billion this year, expect that number to go up to maybe like 200 billion like next year.
I would not be surprised.
Yeah. So just keep that in mind because again, I just to me, I see long-term opportunity and delayed gratification. I just don't know where analysts and other investors will feel if they don't start seeing those pay off in the next couple of years. Because Facebook has been penalized for it. Google hasn't been penalized as much,
Mm.
mainly because I think again they have a more prudent spending policy. So we'll see. But it will be a very interesting story to see play out over the next couple months.
Absolutely. We'll keep an eye on that one. Let's move on to SpaceX, man. I mean, I find this kind of a little surprising that they actually went ahead and set the price and rather than having the market kind of determine what the price is going to be. But I mean, it's Space IPO has officially set its IPO price at $135 a share ahead of the public debut next week. So again, like this values based on this at the $1.35, I mean $135 per share, that brings the value of the company at $1.77 trillion. This makes it the seventh largest company in the US, sitting just above Tesla 1.6 trillion market cap. That is crazy, man. I mean, they're planning to sell about 555 million new primary shares to the in the stock market. And again, they also said they're gonna. I think this putting aside like was it 13-20% just for retail traders or something like that. I mean, it's a big number too. So let's talk a little bit about that, man, because I think this is gonna be interesting if it's actually going to run from here or it's going to be dropping from here. I mean, we'll see next week exactly how it's going to look like.
So I don't like making predictions, but the way I see the SpaceX IPO when it comes to retail investors, it's kind of like how much more juice can you squeeze out of a lemon at this point, right?
Yep.
Because I really feel like the private investors, the insiders, the early investors, I think they have made most of the money based on the revenue that SpaceX has already made. And how those revenues are going to grow moving forward, I just don't know if there's a path to justify $1.75 trillion at this point. I just
Uh,
don't see it. I just don't see it. Because when I start looking at other companies that are in that same ballpark and the amount of revenue that they make, I just I question a lot of things. And I'll just give you an example. I think I posted this on my page not too long ago, but and I get the businesses aren't exactly the same, but Meta makes $200 billion a year in revenue. They're under $2 trillion, if I'm not mistaken. They're like 1.6 trillion. TSM makes about $119 billion a year in revenue, and they're just a little bit over 2.2 trillion. Tesla makes $94 billion a year.
Yeah.
And they're slightly in that same range. SpaceX is about $18.7 billion a year. And you want to tell me you're at already $2 trillion?
That's crazy.
That's crazy. So what you're betting on is the future trajectory of what Elon Musk can deliver. And you also have to understand that you're still investing in a business from a profitability standpoint that is losing money still. So, and I want to say, I don't know if there's any trillion-dollar company that's losing money at this point. They might be the first one.
Right.
Like, do we have a trillion-dollar market cap company that is gap negative, that's losing money? SpaceX would probably be the first one.
Yeah, maybe.
So the way I see it, I think SpaceX will be a generational short. I think it will be.
Ooh,
I
that's gonna be
think
crazy.
I think SpaceX could be a generational short. And when I talk about generational short, I'm talking about possibly the valuation getting cut by like 40%. I think it's possible. I don't think it's impossible. But the question is that when the lockups start to expire, do insiders hold or do they start selling? That's the key. If they start selling, to me, that could be a catalyst for the value of the stock to drop significantly. And the thing is, they can sell, make money, and then buy back at a lower price if they want to. So to me, them selling necessarily doesn't mean they don't believe in the story. To me, it means I've been in this name in private equity. I need liquidity. Let me pull some money out.
Need some money.
Need some money, and then I can probably either reinvest later or possibly look at other ventures that I can reinvest in. So that's just my thesis. I could be wrong, but the way I'm seeing how private credit is moving and how private equity is moving, I think that there could be a liquidity event where they're like, okay, we need to exit, because private equity, they don't make money until they exit. They don't make no money. And if you look at this $555 million shares that they're offering, these are new shares. So these are not insiders offloading what they own.
Yep, exactly.
So all of that money is going to go to SpaceX to use for their business. So private equity is not making any money in this deal, or insiders are not making any money in this deal. They're going to have to wait for an opportunity to sell later when the lockups expire. So this will be very interesting next couple months. And I'm just going to go out and say, I really think it could be a generational short.
That's going to be nuts, man. Also, if the IPO price just moved like 2% when they open, if you just move 2%, it will make Elon Musk the first world's trillionaire, because he owns over 50% equity stake in the company.
Woo!
And that's worth $750 billion right now. So if this thing move even like 2%, he's the world's first trillionaire. I don't know how long he's going to hold on to that. But he's gonna go in the books as the first world trillionaire. You know,
he better take a screenshot.
Yeah, he's gonna take a screenshot, something. But that's gonna be nuts, man. That's gonna be nuts. I think he might get there in the first couple of days, but like I agree with you, man. Like I think after a while, those private equity take their money, need to be, because they've been in the stock, they're probably in the company for a long time, pouring money to the company. So this is their opportunities to be able to, get liquid, basically, to be able to get their money back and share, get some profit and go sit on the beach somewhere. So I think this is this is probably going to be their opportunity to be able to do that. So I agree with you. We're probably going to see the stock pull back when that open period ends, and I think we will see some pullback from that. Speaking of that,
And
I
I,
don't when would that actually be?
yeah, I gotta. So they gave out an amended S1. So I'm gonna
Okay.
spend the weekend looking at the amended S1 to kind of get an idea of when those lockups
Yeah.
are gonna happen. I was actually surprised that none of the early investors or insiders are offloading shares in this IPO. I was actually surprised because back in 2017, when Snap went public, when I saw Evan Spiegel offering more of his shares to unload, that was
Mm,
my confirmation that I need to be short
part
this
two.
name
Yep. Yep.
because people are looking for liquidity to get out of the name.
Yep.
And as a CEO, I felt like he was kind of selling people a sham product, in my opinion. I thought it wasn't
Yep.
a good product. And I
Yeah.
thought it was overvalued. There was no path to profitability in the S1. So based on those metrics, I was short Snapchat out of the gate.
Yeah.
So we'll see what happens.
Yeah.
I'll also give an example. Remember Cerebras? On the first day of trading,
Yeah.
there are
Yeah.
some people who bought Cerebras over $300 because it traded to a high of 386.
Yep.
Cerebras is now trading at 214. The
Yep.
IPO price was 185, so it's getting a little bit closer. So
Yep.
I'm not saying that this always happens, but I'm just saying that it can
It can
happen.
happen.
It
Yes.
can happen. So you always have to keep that in mind. And I really feel like we're getting to a point where, you know, if anybody has a chance, go on Bloomberg and listen to the interview with Ray Dalio today. Some good information. I'm not saying that he's right, but
Mm.
there's some good information to think about when you think about how the whole market is constructed as of today. A lot of things to think about. So
Yep.
I
Yep.
think
Yep.
I think Cerebras gets back to that IPO price pretty soon. I think it
Yep.
does. I think
Yep.
it does. So
Especially
we'll
if this,
see.
especially if this pull back right now, I wouldn't be surprised if people taking some profit right now.
Correct. Yep.
But
Yeah.
let's move on.
I would
Let's
not.
move on yes. Let's move on to next week, man. We have some. Well, I guess this week most of the reporting that we're waiting for is mostly have to do with jobs. So we have initial jobless claim tomorrow at 8:30 a.m. to gauge the labor market layoffs. We have the non-farm payrolls on Friday, the unemployment rate on Friday, the average hourly earnings, and then consumer credit. All that's coming out on Friday. Next week, however, we have CPI. This is probably going to be the most anticipated inflation metrics because this is going to measure exactly where we are when it comes to inflation and stuff. So I think then the expected number to be around 2.8%. We shall see where we're going to end up with that one actually. And Thursday we have PPI again, wholesale inflation data. The forecast is about 1.4% with core PPI at 0.6%. So again, we shall see where we end up with that one. But this is actually going to be an interesting first numbers with the new Fed chair. So we'll see if he has anything to offer for that. But yeah, let's. I mean, what is your prediction, man? Because this might actually be another number that might actually drive us a little bit down to a sell off. Actually,
I mean, I don't see them raising rates at the next meeting. I think they're probably going to hold rates,
yeah,
but I think what will be interesting is after the meeting, what the Fed notes show what happened in that meeting. And I'm starting to lean towards the consensus that there are more and more Fed chairs that are leaning, or more people on the committee that are leaning towards a possible rate hike.
Woo!
Um, I will say that that is, you know, that is a toss up to me because again, no one knows how this whole supply chain shock with Iran and the Strait of
Yep,
Hormuz. No one knows what's going on. Like
yep,
it's Iran wants to make a deal. Iran tries to make a deal, the US rejects it, or the US sends them something, Iran rejects. Like we don't know
we
what's
don't
going on.
know. Yep,
Like we don't know. And this could literally go on for 2 or 3 years.
yep,
Like we don't know for sure.
yep, yep.
Or at least until the administration changes. So
Mm-hmm.
it's at this point it's a toss up. Like it's just is it a war or is it a standoff? Like I
Right,
don't know what's going on.
right. Like where we at? Yeah, exactly.
Correct. But all I know is that you're seeing oil inventories continue to drop. So if you just look at the data's not good.
Mm-mm.
So, and again, it takes time for these supply chain shocks to hit the market, and we'll just have to wait and see.
That-
Yeah. So
Yeah, that's gonna be interesting numbers to look at. Especially I see, like I keep saying, like this is the end of the second quarter, but it's very, very important to see exactly how we close this quarter. It's gonna be very, very important.
yeah.
So we'll keep an eye on those numbers. But before we wrap up, man, anything you want to say to the people as we move into to this week, to the end of this week, going into next week?
Yeah, the only thing I'll say is like if you're not in a 401k or an IRA where you're probably not going to touch the money for the next 20 or 30 years or 25 years, to me, if you have been in any of these AI names and you are up tremendously, think about taking profits.
Yep.
Just consider it. Don't put it on autopilot, right? Now, if you're telling me you don't care what happens to the money over the next 10 years, okay, then maybe you don't care,
Yep.
but just be prudent and have some sort of exit strategy. Like, again, you don't always have to get out of the position entirely,
Yep.
but as that position grows, so there's the target that could affect your downside. So keep that in
Yep.
mind. Or if you want to stay in the position, you can hedge. You can
Yep.
always buy some cheap puts to hedge. So if you do see a big pullback, you can take those puts, profit off the puts, and then use the put profit to maybe buy some more shares.
Exactly. Exactly. Yeah.
So
Hedge, hedge in the short term. Yeah.
yeah, you can always hedge in the short term. So keep that in mind. You don't always have to buy puts just to make money off the downside. You can also use them as a hedging mechanism. So
Yep. Yep.
or
Absolutely.
sell covered calls. You can do that too.
Absolutely. Absolutely.
Yeah.
But with that being said, y'all, I mean, we're gonna keep an eye on the market over the next couple of weeks, going to the end of the month and see. I mean, we just started this month, but we already seen some sharp pullback. So we shall see if this is actually the new trend or is something gonna happen will reverse up to the upside. But this market is full of surprise, man. So just keep your eyes open.
Don't
Keep
fall
your
asleep at the wheel.
do not fall asleep at the wheel because this market can do 180 in no time. So please stay very, very focused on what's going on with the market. But with that being said, man, I'm Billy Clement. I have Wale with me. Stay informed, stay disciplined, and please, we'll see you guys on Friday. And yeah, you guys have a good night.
All right, everyone, take care.